We all know the big, beautiful bill passed on July 4th, 2025. And unfortunately, there was nothing crypto related in that entire bill, regardless of all the online speculation that Bitcoin was going to have no capital gains. Same with crypto. But Cynthia Loomis has stepped up to the plate. And as you know, she's incredibly bullish on crypto. Well, mostly Bitcoin. And now she's pushing for a brand new crypto tax legislation. She wants to end double taxation on miners and stakers, set it up to $300 tax threshold limit, set up to a $300 transaction threshold to essentially exempt small transactions so that people can buy, sell, do whatever they want to do, use crypto to buy things, and really just kind of modernize current crypto tax regulation policies, because a lot of this stuff is outdated. But have no fear. I have my personal CPA, Scott Martin, come on. He's going to explain to you what this means, what we can expect, and all of the details. And if you need CPA help, hire Scott.
We're going to talk about Wyoming Republican Senator Cynthia Loomis's new digital asset tax reform bill just released on Thursday. So here's what you need to know. First, there's the $300 de minimis threshold, meaning that most small crypto transactions like buying coffee or paying for media subscription with crypto won't require tracking capital gains. As you know, anytime you liquidate or dispose of crypto assets, that triggers a taxable event. That means if you go out and purchase a quarter pounder with crypto, you've got to figure out what the gain or loss is on that transaction as it's considered a disposal. What they're trying to do is to reduce burdensome accounting compliance for everyday crypto use. Second, there's an initiative ending the passive income tax on staking and mining rewards, which currently is taxed at receipt and will now only be taxable when ultimately sold. This will be nice for investors who don't want to liquidate their currencies just to pay their tax bill. Third is the clause introducing standard securities rules, which may not be the greatest part of this bill for crypto investors, but definitely is a move to legitimize these investments by bringing them more in line with standard investment requirements by the SEC. One of the elements of this clause will be to make wash sales illegal. Fourth is to simplify charitable contribution accounting by no longer requiring a formal appraisal for tax deduction purposes. Senator Loomis did attempt to include these proposals in President Trump's recently passed One Big Beautiful Bill budget reconciliation package, but were excluded during the final amendments. The senator has emphasized the need to modernize tax laws to embrace the movement to digital assets. How's this going to affect you? The $300 de minimis threshold on purchases using crypto will definitely spur the acceptance of digital currencies by companies, further supporting overall acceptance and use of crypto. The postponing of taxing passive income acquired through staking and mining rewards will also stimulate the use of crypto in those areas and ease taxpayer burden, as they won't have to liquidate crypto in order to pay their tax bill. This bill won't go to vote anytime soon, and with the current administration's dedication to support the digital asset movement, there will probably be further legislative action forwarded after the dust has cleared from the recent bill passing. We'll keep you posted.